Assalamualaikum warahmatullahi wabarakatuh. My name is Nafisa binti Muhammad Najib, 268010, and today I'm going to present project presentation for financial accounting and reporting 3. So we have chosen 5 company which consists of Spring Gallery, Cheetah Holdings, Caring Pharmacy Group, SAWANDI Berhad, and London Biscuit Berhad. So today I'm going to present the company background first. So firstly, Spring Gallery Berhad. Spring Gallery Berhad are known as DWR Resources in 2019 because they have changed their company name in 2019. So DWR Resources are a company that are involved in property development, property investment, and construction. So their business activity include in ceramic and pottery industry and property construction, property investment, and development sectors. So next are Cheetah Holdings Berhad. So Cheetah Holding Berhad are established in 1977. So this company is principally engaged in product designing, product development, marketing, and retailing of sport apparel, as I said earlier. And the business activity include in product designing, retailing of sport apparel and accessory, retailing of clothing and sport and footwear, and all type of garment and apparel. So that are the business activity. And next is Caring Pharmacy Group. So Caring Pharmacy Group is the company that engage in operation of community pharmacy, including retailing of pharmaceutical, healthcare, and personal care. So their business activity includes drugs and drug sundries merchant wholesale, and pharmaceutical and medical manufacturing. Next is SAWANDI Berhad. So as we know, SAWANDI are producing mineral water. So this company are incorporated in Malaysia as private limited company in 1993 as SAWANDI Berhad. And the business activity is beverage manufacturing and soft drink and ice manufacturing. And last but not least, London Biscuit Berhad. So the history of London Biscuit Berhad is this company was incorporated in 1981. And their business activity include in sugar and confectionery product manufacturing, merchant wholesalers, and non-durable goods. Next, I will present 2.0, which is disclosure of MFRS 110. So all of these company, there are some of them have adjusting event and non-adjusting event. So as Cheetah Holding Berhad, they did not have any adjusting event, as we can see in the table. And Caring Pharmacy Group, they have non-adjusting on 2016, and London Biscuit Berhad have non-adjusting on 2016 and 2018. And then Spring Gallery, they have an adjusting and non-adjusting on 2016 and 2017, whereas SAWANDI doesn't have any adjusting and non-adjusting event. Spring Gallery Berhad, their adjusting event are include of 25% of the par value of existing ordinary share of 50 cents each, and 0.025% of the par value of existing irredeemable convertible preference share of 0.05 cent each will affect the dividend in financial position. And next, non-adjusting event are acquired 2 ordinary share representing 100% of the total issue and paid up share capital. For instance, initiative Sdn Bhd, total cash consideration of 2 ringgit. And the company did not make any adjustment in financial statement for the year accounting period, but require disclosure in notes of financial statement. Adjusting event for 2017. So PNSB shall refund the contract bond and performance bond amounting to 19 million ringgit, and settle the outstanding trade balance and retention sum owing to PSSB amounting to 1,384,320, totaling 20,385,320, 60 days from the date of the deed. And next, pursuant to the termination, the performance bond amounting to 2,050,000 paid under the JVS shall be refunded by HSSB to MRDSB. And also for non-adjusting event, no amount involved of the event on company financial position. The company subscribed for 99,998 new issued ordinary share of 1 ringgit Malaysia each in MRDSB to retain its 100% quality interest. Debt amounting 50,297,320. Transfer residential condominium value RM 30,235,500 to PSSB, and cash payment by PNSB to PSSB of 2,062,820 on or before 15 November 2017. And SGB entered into a SSA in relationship to the proposed acquisition of 100,000 ordinary share in KISB, which represent 100% of the issued and paid up share of KISB. And lastly, purchase consideration of 3,500,000 on 3rd August 2017. Continuing the previous slide, total cash consideration of 8,250,000 on 18 August 2017. The purpose acquisition of 2 million ordinary share in KTG Marine Sdn Bhd, which represent 100% of the issue and paid up share capital. PSSB proposed acquisition of 500,000 share in SRSB. And lastly, for 2017, amount of purchase consideration of 1 million ringgit on 29 September 2017. And as for 2018, there is no information regarding MFRS 110. And as for 2018, there is no information regarding MFRS 110. The amount involved or the possible impact of the event on company's financial position is not available and no information. Next, Cheetah Holding Berhad. So based on the annual report of the company for year 2016, 2017 and 2018, there is no information regarding MFRS 110, and the amount involved or the possible impact on the of the event of company financial position is not available and no information. So I will move on to the next slide, which is Caring Pharmacy Group Berhad. On 2016, the non-adjusting event are includes in disposal of 2 ordinary share, disposal of 2 ordinary share in Miracle Cure Caring Sdn Bhd, subscription of 1,500,000 ordinary share of 1 ringgit each, and subscription of 100,000 ordinary share of 1 ringgit each in CPRM for a total cash consideration of 10 million ringgit. In 2017 and 2018, there is no information regarding MFRS 110, and the company should not make adjustment in financial statement but require disclosure in notes of financial statement. Move on to the next slide, which is Spritzer Berhad. So based on annual report of Spritzer Berhad, there is no information regarding MFRS 110 and the amount involved or the possible impact of the event on company financial position is not available, and no information. Next, I will move on to the London Biscuit Berhad. So London Biscuit Berhad in 2016, they have a non-adjusting event which is on issuance of 100 million unrated medium term notes MTN, unrated MTN program to up to 100 million ringgit. So 2 million ordinary share of 1 ringgit each, Datuk Sri Liew Kyew Hin, at a price of 80 cents per ordinary share. An offer of 5,000 ESOS option eligible person, and exercise price of 1 ringgit per share. Next, the total amount of the option offer is 1,500,000 shares, and the company did not make any adjustment in financial statement but required to disclose it in notes of the financial statement. As of 2017, there is no information regarding MFRS 110, and as for 2018, there are non-adjusting events which include issued 2,600,000 new ordinary share at an issue price of 55 cents each, and the company's auditors for the previous financial year ended 30th September 2017 has resigned and issued 3,053,000 new ordinary share at an issue price of 58 cents each. And Kinos Food Industry issued 15 million new redeemable convertible preference share to COPE Opportunity at the subscription price of 1 ringgit per RCPS, and issued bonus share of 1 for every 4 existing share, totaling 51,296,352 bonus share, and 9,320,326 new warrants were issued on 24th January 2019. That's all from me. Next slide will be presented by Sharifah Nur Iman. Thank you.
So now I will present about financial ratio analysis. The first ratio is quick ratio. Quick ratio is an indicator of a company's short-term liquidity position and measures a company's ability to meet its short-term obligations with its most liquid assets. It is also called as the acid test ratio. Generally, a higher quick ratio indicates that the firm has enough quick assets to cover its short-term debt immediately. So if we look at the data here, we can see that Spring Gallery Berhad has the highest amount of quick ratio, which is in 2016, it has 12.33 times. In 2017, it has 11.69 times, and 2018 it has 14 times. It means that Spring Gallery Berhad has most assets and liquid assets to cover its short-term debt immediately, compared to 5 other companies that has lowest assets and liquid assets to cover their short-term debt. The second ratio is inventory efficiency ratio. Inventory efficiency ratio is a ratio measures the number of times inventory is sold and replaced during a time period. From this data, we can see that London Biscuits Berhad has the highest amount of inventory efficiency ratio. However, Spring Gallery Berhad has the lowest amount of inventory efficiency ratio. In 2016, London Biscuits Berhad has 12.88 times of inventory efficiency ratio. In 2017, it has increased to 15.61 times, and in 2018 it decreased to 10.92 times. So it is clearly showing that London Biscuits Berhad is the fastest company that sold and replaced their inventory, while Spring Gallery Berhad is the slowest company to sold and replace their inventory. The third ratio is trade receivable days. Trade receivable days is the amount of time it takes for a business to receive payments owed by its customers in terms of account receivable. Company calculate trade receivable days to make sure they have enough cash on hand to meet their financial obligations. From this calculation, we can see that Cheetah Holdings Berhad has the best trade receivable days, which is in 2016 it has 334.61 days, and in 2017 it has increased to 343.23 days, and 2018 it has 385.89 days. So it is clear that trade receivable days indicates the number of days taken by company to collect its account receivable and reflects the company's credit policy, that is whether the company is practicing a strict or loose credit policy. So the best trade receivable days show that the company can collect the account receivable easily and strict on their credit policy, while the bad trade receivable days mean that the company had bad cash flow because it's difficult to collect the trade receivable and bad in their credit policy. The fourth ratio is trade payables days. Trade payables days is the amount of time it takes to pay their suppliers in terms of account payable. Most of the company love to increase its payables days, except it leads to other problems such as damaged reputation. From the data here, we can see that Caring Pharmacy Group Berhad has the best trade payables days, which is in 2016 it has 370.57 days, and in 2017 it has 336.67 days, and 2018 it has 363.68 days. This ratio measures the number of days that a company takes to pay its supplier. If the number of days increase from one period to the next, this indicates that the company is paying its supplier more slowly and may be an indicator of worsening financial condition. In overall, we can see that Caring Pharmacy Group Berhad is the company that have stable financial condition, and Cheetah Holding Berhad is the company that has worse financial condition to pay their supply based on the trade payables days ratio. Next ratio is sales to working capital ratio. Sales to working capital ratio indicates how sales are produced efficiently with working capital. All else being equal to the company, the ratio will prefer to increase. It also refers to the investment level in inventory and receivables less payables. So we can see that from this table, we know that Caring Pharmacy has the highest sales to working capital ratios than the others company, which is in 2016 it has 32 times, and it increased in 2017 to 41.52 times, and it continues increase to 90.56 times in 2018. Sales to working capital ratio indicates a company's effectiveness in using its working capital. So the higher the ratio, the effectively the working capital. Hence, when we look at the latest result of calculation, which is in year 2018, we can see that Caring Pharmacy Group Berhad is the company that have manageable capital asset, and Spring Gallery Berhad is the company that has worse financial condition, followed by Cheetah Holding Berhad, London Biscuits Berhad, and SAWANDI Berhad, based on the sales to working capital ratio. The last ratio is working capital. Working capital represents the difference between a firm's current asset and current liabilities. From this data, we can see that Caring Pharmacy Group Berhad has the lowest working capitals, and London Biscuits Berhad has the highest working capital. Working capital is the capital of a business which is used in its day-to-day trading operations, calculated as the current asset minus the current liability, where is intended to show how a company can fulfill its existing financial commitments and test the central financial solvency of the company. Therefore, the greater the ratio is the better to the company. So, in conclusion, we found that the selected company known as Cheetah Holding Berhad, Caring Pharmacy Group Berhad, London Biscuits Berhad, Spring Gallery Berhad, and lastly it's SAWANDI Berhad annual report for the 3 years, which is 2016, 2017, and 2018. So almost all of these companies have MFRS 110 even after the reporting period and key audit matters for the 3 years respectively. This finding help us to improve our understanding on this topic even after the reporting period. We have learned how to apply our knowledge on financial ratios in determining the company's insolvency. The knowledge and experience that we gain on this project we can use for our future life and can use furthermore in our life. So that's all from our group. Thank you.